Listen, the reality of the situation is this. A lot of people right now are selling off on the market, right? They're selling stocks that they bought high and now they're selling low. And I did that for many, many, many years until I learned a very simple strategy that puts me in the driver's seat and works even better during big market sell-offs like we're seeing right now. Guys, I hope you are having an absolutely God-blessed day. Hit that like button and that subscribe button. Let's go over the shoulder. Guys, obviously we are in extreme fear right now. 13 on the fear and greed index. VIX is spiking high. We've got earnings tomorrow for Nvidia, which is obviously adding a lot of volatility into this market, and Walmart as well. Two very, very big names that we need to be paying attention to. Now, either way, whatever these is going to do to the markets, right? A lot of people are extremely emotionally trading right now, which is hurting you. It's going to lead you to a ton of losses. And listen, I'm the first one to tell you, when things are going down, you see your portfolio going to red, the first thing you want to do is like, just let me go sell. Let me just go sell some of my stocks and lock in some of the gains. Well, guess what? Those gains you should have been having the past few months. So I'm going to show you a strategy right now that you can deploy during market downturns, when the stock market's booming, or even better yet, when it's just going sideways. And we're going to use Nvidia here today as our example right here, because it has been getting a bit beat up since it kind of hit that top Bollinger Band, or that 206 level. And I'll explain all that stuff here in just a minute. I just want to share with you guys what the possibilities of this strategy are, because I think it's going to open up your mind to the degeneracy is out there, right? All right. So a lot of people, like with the Reddit brain, they're buying high and they're selling low. Listen, drop an amen in the comments. I can't be the only dummy that's done that many, many times before. And I have, right? Because this is the stock market, baby, and it gets the best of us. No matter how strong and mentally you think you are, it will test all of us, and it's testing a lot of us right now through November, really all of November. But we praying for the Santa rally. Drop the amens for the Santa rally, right? But with that said, let's go take a look at Nvidia right now, and this is how I primarily invest right now. Now, I do have buy and hold portfolios, but I primarily, what I'm sharing you with right now is a focus on income generation. I consider myself an income investor, and I look at the stock market with this strategy as a business. My sole purpose is to make money with this strategy, and that is it. Get in, get out. And I'm not talking about just going out there and buying like some shares when the stock is dipping. Now, that's not a bad idea, especially for the past week. Nvidia is down, close to 8% right here, right? For the month, it's still a little positive, right? Just kind of going sideways for the month, but down about 7%. A lot of people will just go out there and buy, let's say 100 shares of Nvidia right now, drop $18,000, and cool, if they hold on to it long term and it hits all-time highs again, perfect. Now, let's say it hits over 206 again here in the future. That's fantastic, right? Not a problem. But there are better ways to invest, in my opinion, especially in stocks that you have high conviction in, especially during large market downturns. So let me show you the strategy that I like to deploy. So what I like to do is I like to sell options, not buy options. I like to sell options, where I basically say that I'm willing to buy 100 shares of a stock at a certain price and on a certain date, okay? It's basically Warren Buffett's maybe I'll buy it strategy. If you want to learn more about the maybe I'll buy it strategy, plus get all my trade logs as well as my calculators, first link in the description. But this is where I learned about this strategy from Warren Buffett when he was doing this, and still does this. He's been doing this for 40 plus years, right? But the one that caught my attention was when he was doing it on Coca-Cola and made like millions upon millions of dollars of premium on Coca-Cola, and he never even bought the shares. Look, what? What is it? Go look that article up. It's insane. So what we're doing on the options chain, right, is we're not options buyers. The options buyers, and I'm sure you've had terrible experiences with options buying. Listen, I can't be the only one. Amens in the comments, right? But an options buyer, you are paying for the right to basically control 100 shares of stock. Now, you're paying money for that right. You're paying money. Now, where do you think that money's going? That's going to the option sellers. I have a firm belief, guys, that most of these options trading strategies and day trading strategies, I know it's contrarian to think, but it shouldn't be. I think they're all designed to just take money from people that are just looking to get rich quick, and then they put them in the pockets of people that have some money and they have discipline. This strategy rewards patience. This strategy rewards discipline. Principles that serve you well in your life. Wouldn't you agree? Discipline, patience, right? When the other side of the coin is the degenerates, right? They need something to happen. They need the stock to move. They bought the option and they need something to happen by the end of the day, or they just lost like $500-$600 or if not more, right? In our situation, we're calm, cool, methodical, collected, disciplined, and patient. So what we can do is we're going to flip to sell a put. All I'm saying is I'm willing to buy 100 shares of NVIDIA, and I get to name the date. So I'm just going to, you could do weeklies on this. Like if I go 10 days out, we could, and I'll show you guys this. Like, let's say you actually want to own 100 shares of NVIDIA in 3 days. Right, I'm going to show you exactly what you could do instead of just going out there and buying 100 shares at the current price, how you could maybe buy 100 shares at a certain price and get paid just for taking on that maybe I'll buy it risk, okay? So I did 3 days away, right? So 3 days away. I'm saying I'm willing to buy 100 shares of NVIDIA in 3 days. That's all I'm saying here. Now, on the options chain, let's say you actually like it at 183. You're like, it's down 7% this past week, right? Like, I actually want to own this thing. Like, I actually like this at this price, right? Well, we can go on this option chain currently trading at 183, and let's say 182.5. You like it at 182.5? Sure, right? Because it's trading at 184 or 183. Well, if you took this risk, right, you would be very well compensated for that with premium. This is coming from that options buyer. This $585 of credit. This is given to you up front into your brokerage account from an options buyer as soon as you open this position. Obviously, results vary, not financial advice. You could see this premium. Look, it's at like 600 now. It was at like 580. It's constantly changing. Now, I always like, so we'll just say 600, 610. We'll just say 600 just for simplicity, right? I like to toss everything into my cash secured put calculators. All my calculators are free at the end of the Ark Options Strategy workshop. First link in the description of today's videos. Go attend it, especially if you're new to the whole selling options. I promise you, it's going to be a great hour and a half spent. So we're going to put $600 of premium that we collect here, right? $600. Right now, your brokerage isn't just going to say, "Hey, Pete, you can afford 100 shares, but where's your money? You better back it up," right? You saying you're going to buy 100 shares at $182, right? So this is going to lock up $18,000, just a little over $18,000. So $18,250, right? That's going to lock up that much money. $18,000 is going to be locked up for 3 days of yours. Now, look at your return. You're getting a return of a 3.29%. Not financial advice, results vary. What the point I'm trying to make, and if you're wondering how I got this return, as I'm dividing 600 by 18,250, right? That's all it is. And I get a 3.29% return in a 3-day period. Now, obviously, you can go look at the annualized return, blah, 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 blah. This isn't as important when you're doing weeklies. These I really just use primarily when I'm managing these positions, because it's like anything in life. You can micromanage this thing and get better returns, et cetera, right? But for the sake of this example, you could see I'm essentially locking up $18,000 in a stock that I want to buy anyway. Okay. Now, with that said, right, well, what if I don't really want to buy the stock? What if I just want to grab the premium? Well, you're breaking rule number 1, my friend, right? Number 1 rule is you want to own the stock. Number 2 rule is, right, what's your risk tolerance and what kind of ROI and collateral are you going for? In my personal opinion, trying to get a 3% return in a week is absolutely ludicrous. You'd be one of the greatest investors of all time. You'd be Bradley Cooper and limitless. I like to say it. All right. But with that said, I do plenty of trades like this myself. I actually just took a trade like this on SoFi yesterday. It's not in our public portfolio because I'm just using my SoFi app to do it, but I'll share it with you guys in another video. And I got about a little over a 2% return in a 3 or 4 day period, which is insane, especially when you analyze that or look at it monthly. So with that said, what's your risk tolerance? If you genuinely want to buy 100 shares at 183, I think this is a good play. You can almost look at collecting this premium. You can even factor this into the cost basis if you want. You're almost getting like you're getting like 3 shares for free of NVIDIA if you factor in the $600 of premium, right? A little over, right? But with that said, you can go lower, right? You can kind of like just look for your a level where it's like you're having a good balance of assignment and not assignment, right? Now, when I say assignment, I'm saying, do you actually have to buy the shares or not, right? Because a lot of times, especially if we look at my public trade log here, you could see that my outcomes, right? Let me zoom in here, guys, so you guys can see this, because you might not be able to, is like my outcomes, right, are often, I close pretty much over half of my positions early, right? I close half of my positions early. 56% of my positions, I'm closed out early. Only 12% do I actually end up getting assigned. 12.5% do I actually have to buy my shares, right? And then a lot of them, 6% expire worthless. There was a couple rolls I did and got called away, right? So you have to understand that. But I'm playing a different game. I'm not playing close to the money, they call it, where I'm playing real close to the current value of the stock price. Now, if me personally, was going to do this trade and I'm treating this like a business, what am I trying to do? Well, number one, think about the strategy. What I just told you was like, you're saying, I really want to own this stock. I really want to own this stock, blah, blah, blah. Well, then you got to go put this in a buy and hold portfolio, because that's not what I'm personally doing. I'm not looking at just a premium. I'm looking at, hey, will I be financially rewarded in the long term holding this stock, not only with just the upfront short term premium I'm collecting. So if I was going to do this trade, what I would do is start looking and opening up these contracts and looking at the delta. The delta roughly gives you a probability chance of assignment. So in this case, this is a 30 delta. This is a little bit more aggressive. This is a 30% chance that you will have to buy NVIDIA at 175 in 3 days from now. Or my approach, right? It's like a glass half empty or half full. I like to look at it as a 70% chance that I'm not going to have to buy the shares. Okay. So what's right? What's wrong? Well, you got to figure out that for yourself. But for me, I like to be around that 20 to 30 delta. And we could see the 170s is a 20 delta, 0.21. So 20% chance of getting assigned, 80% chance that this will expire worthless. But look how less my premium is. I would be collecting here $215, we'll just say, of premium. Right? And let's just toss this into the calculator. I'm collecting $215 upfront of premium from the options buyer, right? And then I'm also locking up $17,000, right? I'm locking up $17,000 here for 3 days. Now I'm getting a 1.26% return in 3 days. This is more of a logical minded trade for me. Right? Look how far off we are, right, from our all-time highs if we get assigned at 170. And if I am bullish on NVIDIA, which I am, and I do believe it will hit all-time highs again, I'm still not just going to rush in and jump in and buy the trade. I'm going to buy it at a great price, because then what I can do is flip the script. So let's talk about the risks, though, of this strategy, this maybe I'll buy it strategy that I love to deploy in market downturns, guys. This is how we can get stocks in at better prices, right? Look at this. Now we're at 230. That's crazy. But with that said, there are risks to this strategy, and that's why I always go back to make sure you're always investing in stuff that you believe in long-term. You get burned when you start getting into the sketchy stuff, like, in my opinion, like the MSTRs and leveraged ETF products. I think that's ludicrous, and I think they're all, again, designed to take money away from retail investors, aka the dumb money they call us. That's just the reality, guys. They call us dumb money, right? But with that said, what are the risks? Well, let's say in 3 days, right? Let's say for this educational example, we actually took this trade. And let's say that NVIDIA is trading at like 180 still. Maybe it had a fantastic earnings report and it shot up to like 200. Okay, perfect. Our contract would expire worthless. That's not a bad thing. That means that our $17,000 will be returned back to us from our brokerage account. We don't have to buy our 100 shares of NVIDIA at 170. And now we don't just have 17,000, right? We have $17,215 now, right? And this is how I like to compound my wealth over time. This is going to be a primary source of income for me, especially during my retirement years as well, because I control the situation. I'm controlling all the variables. I'm not an options buyer where I'm like, I need something to happen. No, I don't need it. I want any outcome in this situation I'm happy with, right? So the second situation that can happen here, obviously, number one, it just expires worthless, or we close it out early and we move on, right? To a different opportunity or whatever we decide to do. The second thing, though, this is a big risk of this strategy that you need to understand is, let's say on the third, NVIDIA had a terrible earnings, huge sell-off, and let's say it's trading at like 165, 160. You're on the hook to buy it at $170, right? So that's it. Like that. Now there are strategies to roll it and like manage that out and stuff like that, sure. But right, that is the biggest risk, is that you may have to buy it above the current market value. But with that said, for me, that's a risk I'm willing to take, because I'm still getting into a company that I believe in long term, and even if there's a short-term pain along the way, I'm still able to dollar cost average in a market sell-off while I'm still collecting some juicy premium. Right? Now, one thing a lot of people like to do is they also like to factor in the premium that they're collecting, right? So in this case, right, I'm essentially like lowering my effective cost basis down with me getting potentially assigned at 170. And there's nothing wrong with doing that. But the real North Star of this whole entire thing, guys, is what is your ROI and collateral? If you go in there blind and you're just selling puts on stocks that you don't believe in, and you're just chasing whatever gives you the most amount of premium, that's what leads to losses, and that's what's going to end up burning you. So if you want to learn more about this strategy, I'm going to show you the 3 secrets to selling options. Not only am I going to show you the how I actually maybe buy stocks, I'm going to show you how I maybe sell my stocks, and then of course how to find low cost tickers, especially if you are on a budget. Plus, at the end of the training, I'm going to give you all three of my resources that you're seeing on your screen right now: my trade logs and my two calculators as well. Click the first link in the description of today's video to attend the Ark Options Strategy Workshop. Remember, guys, sell options, collect premiums, repeat. I'll see y'all tomorrow.